I'm Angie Austin with Oil and Gas 360 here at Intercom's 2019 Oil and Gas Conference in Denver, Colorado. And we are joined by Brian Schmidt. He is CEO with Tamarack Valley. Welcome, Brian.
Hi, how are you today?
I'm doing quite well, thank you. Good to see you again. It's been several years that we've been speaking with each other.
Yeah, it's good to be back, Ian. Yeah.
Oh, good to have you. All right, so first of all, let's start with telling us about Tamarack Valley and what sets your company apart from the other Canadian E&Ps.
Yeah, I'd say there's four things. We're a light oil producer. We have great netbacks on our product, and that gives a lot of free cash flow. So we're going to be about probably $30 to $40 million free cash flow this year, and that's going to rise to probably $40 to $50 million free cash flow next year. It really is a sign of a good, profitable company.
Yeah, it is a good sign, I agree. All right, let's talk about your team. Your team has a great deal of experience in taking a measured approach to growing production at an E&P. So how does that experience benefit Tamarack Valley Energy, and how has the process changed in the last 5 years?
Yeah, I think we've always put in place an incentive system to reward people for certain goals. So for example, full cycle rate of return, that's all your cost structure, land, seismic, G&A, all rolled in to make sure you deliver a good rate of return. And then if employees do well with that, then they'll get a portion of their bonus that's tied to that specific measurement. And that's all audited numbers by reserve reports and financials. So it's not numbers that are made up internally. It's based on real things. So that's been a real advantage for us. And it really focuses your capital to make sure you're getting the returns that you want on your capital allocation.
Sounds good.
In terms of the change, we introduced the last 2 years total shareholder return, and that's measured against 10 peers. So we have to do better than the 10 peers, or we get compared to that. And the higher up you get in the top of that 10 peers, the more incentive you get as a company.
Well, incentives are always good.
They work.
Yes, they do. That's true. All right, you put an emphasis on drilling inventory with a 1.5-year or shorter payback period. So how do you build an inventory of such high-quality assets and manage their development?
Yeah, so in that quick payback, when you force yourself to get your money back on your return, it means you have more cash flow to reinvest again. So we've kept that discipline on the payback period. And we just don't get in any plays that don't have that don't get that. So the Cardium and the Viking, we've been very satisfied. Those two plays are giving us the payback we want. Other plays, we just don't get involved in it.
All right. So what's next for Tamarack Valley? How do you hope to be showing investors? What do you want to show them this time next year?
Oh, I'm really excited about about what we have next year. We've invested about $50 million into the waterflood. One of the reasons for the extra cash flow that I spoke about earlier is that as we slow our declines by building up waterflood production, we're becoming a stronger company. And that's what really sets us apart from other companies right now. There's about 100 million barrels of oil to go after in the waterflood. That's 2 times the size, reserve size of the company that we can go after. And so next year at this time, I hope to show some very good, solid results. We're already seeing some boost in oil production already from the waterflood. I'm very excited about how it's responding. It's responding better than what we had anticipated. So I think by this time next year, we'll have a really good story. We're anticipating about over 2,000 barrels a day of oil production to come out of the waterflood, and that's just at its early stage.
Sounds like an exciting year ahead of you.
Yeah, it's going to be really neat to watch what happens.
Now, at the beginning, Brian, I mentioned that you and I have spoken several times. I think I've been here 5 years, and you a little bit more than I have. What brings you back to the Intercom conference every year?
Well, this conference gives us access to a different suite of investors. So typically, most of our investors are Montreal, Toronto based, and we get, this is one access for small companies to meet investors here that might want to come to your invest in Canada. So, and I think the fortunes are changing in Canada. We have pipeline access issues that appear to be making their way to getting solved. Improved rail access. So some of the reasons why investors may not have wanted to move into Canada before, I think can. The valuations are spectacular. I mean, we're trading at somewhere around 2 times cash flow. That's the lowest in the company's history. So it's a good buying opportunity. It's obviously why management has been buying stock here recently as well.
Now, in terms of the presentations, do you get a lot out of those? And I know you do present as well.
Yeah, we do, both the one-on-ones and the presentations. I think the way the conference has the breakout sessions after, people can follow up with questions.
Nice.
And that's a real nice add that you don't typically get in other conferences. Nice
okay,
to see
that's
that.
good to know.
Yeah.
Great. All right, thank you so much. Brian Schmidt, CEO with Tamarack Valley, and I'm Angie Austin with Oil and Gas 360.